guys, it's Carter. Welcome back to the team. Hope you guys are all having a great and amazing day today. Guys, we have a very exciting video today. Tesla just released their Cybertruck. We're going to be seeing if this has any correlation with the stock market and answering that main question of, is now the best time to invest into Tesla? So I hope you guys all enjoyed this video. If you guys do, hit that like button and subscribe. If you guys are new to the channel, new to the team, my name is Carter and we talk about everything money from stocks, money management, trading, investing. So subscribe and join the team. And if you guys want to learn more about trading and investing in the stock market, I just released a brand new swing trading course where we talk about my strategy, my mindset, how I find stock. Pretty much it's a one-stop shop for all of your swing trading needs. Now, we were doing the Black Friday sale last week and I decided to extend it for another month. I wanted to help you guys out. I have been getting a ton of people saying, Carter, I love the course, and I wanted to help out as many people as I can. So guys, check it out, link down below. You guys can use code THANKFUL to get 30% off, only valid for this month. So what has been going on with Tesla? Well, looking at the weekly chart here, you guys will see that Tesla this past week has had great growth, right? Kinda. And what I mean by that, the stock went from about 235 all the way up to about 252. Now, it immediately sold off back down to 234, 235. Now, the reason why we had this amazing excitement is because of the Cybertruck announcement. Everybody was pumped, everybody was excited, and anytime you have that, you're going to have buying pressure involved, right? And that's kind of what we saw. We saw this great move, and then you guys will see right here, they announced it, and then the stock started selling off. Now, why did we get sell off? This is a very common question I've gotten asked. Well, all right. It starts all the way back in 2019 where Tesla unveils pretty much their first electric pickup truck, the Cybertruck, starting at about $39,000. Now, during this time, Tesla was doing a $100 reservation and they got swamped. Everybody was pretty much doing a reservation. It was only $100. And this caused Tesla to really focus on this truck. A couple years later, they announced it this past week. Now, the issue and why we got sell-off is because of this. That price from $39,000 all the way to $60,000 starting out. Yes. So anytime you have that announcement, what's gonna happen to that? So all those people that were planning on buying this truck for 39 grand now have to spend 60 grand. It's not like it's just $2,000 or $3,000. Guys, it's like over $20,000 difference. So anytime you have this announcement, you're gonna have sell-off, and that's kind of what we've seen. But I do think in general spec, Tesla definitely carries a lot of long-term potential. They're definitely the leader of the electric auto space. And as we look at some of their fundamentals, you guys will see this. Now, looking here, you guys will see that they've had a decent amount of vehicle deliveries. They've kind of had a little sluggish on their earnings per share. But looking at some of their revenue is up about 8%, as well as their assets are up as well. Now, to answer that main question of should you invest into Tesla during the Cybertruck announcement, well, obviously around this time you're just going to have more volatility. As we look at like the long-term chart, you guys will see that Tesla does have a tendency of using that red line as some support. So we could see a little buying pressure, from 238 probably to about 267. But honestly, for me, I'm buying Tesla. I know it's crazy. I know it's crazy to say, but I definitely think Tesla, for me, carries a lot of long-term potential. They're the leader of the electric auto space. They're highly invested into AI, software, data. And with that being said, if Tesla can take, some reservations and make some money off this is just going to mean more revenue and more stuff for a Tesla. And I understand Tesla's a growth stock. So what that means is it's going to be more volatile than normal companies. It's going to be more volatile than companies like Apple, or Coca-Cola, Home Depot. This thing is growth. But with growth, with risk, often carries higher reward. And to answer that question, what's the best strategy? Well, what I do and what I think a great strategy is, if you're a long-term investor, would be to dollar cost average. Dollar cost averaging, in my opinion, is probably the best way to invest into Tesla. What dollar cost averaging is investing consistently. Now, what this does is it gets a good average price for your share. So if you invest, let's just say once a week, what you do and what you develop is, as Tesla stock sells off, like we've seen, what you're doing is you're averaging down that price. So once it recovers, you make a lot more money, because now instead of your average cost being super, super high, now it's right in the middle. So your break even point is a lot lower, so you can make a lot more money. It's a great way to invest in growth stocks and a little more volatile companies. Now, if Tesla stocks start squeezing up, you have shares to make money off it. That's what I've done over the past several years with Tesla, just because I think it's a long-term play. I think looking back in 2 to 5 years, we're going to be wishing we would have bought Tesla, at 238. And I understand this is growth, this is risky, so do your own research before you guys invest. But honestly, I do think the Cybertruck could take some orders away from one of the largest truck manufacturers, which is Ford. Ford sells so many trucks every single year, so many F-150s. So if Tesla can take some of that competition, that's going to mean more revenue and more money for Tesla. So guys, hope you guys all enjoyed this video. If you guys did, hit that like button and subscribe, and we'll see you guys tomorrow or later in another episode. Take care.